This week on the G.L.O Show, Billy Halick has returned, so you know it's going to be a good time. Welcome to the G.L.O Show. Welcome to the G.L.O Show. And remember, if you're playing the drinking game at home, it's one shot every time we say real estate, 2 shots every time we say mortgage, and 3 shots every time we say foreclosure. Well, so we're going to get started on today's G.L.O Show. Once again, I've got Billy Halick here, a regular on the show.
Hello.
So we actually started drinking beforehand. So if it seems like we're a little relaxed today, took off the ties and we're just going to have some fun. So Billy, let's start off what we always talk about. Let's talk about mortgages. What's going on?
Rates are still relatively low. They crept up a little bit, but overall, I think rates are very good. 4.125, 4.25-ish, something like that. You know, there's a lot more to it. You have to have a certain credit score, down payment, blah, blah, blah. So I can't really quote rates without the full thing.
Owner occupied, best case scenario,
for a very
good
clean
credit.
Deal, that's really where you'd be today.
Yeah, hovering around that 4 point.
Low 4s, I would say.
3.75, no good anymore, huh?
I don't think it, well, maybe in an FHA land type of thing. I'd have to look without really, quoting the deal.
Now, I always care about guidelines because you hear me talk, I've said it before, guidelines were too loose, now they're too tight.
I think guidelines are still pretty tight, but tight to me is a good thing. That means loans are being written that are quality.
You don't think they're too tight though? You don't think that there are people out there who should be getting mortgages that just aren't qualifying?
I think the self-employed population is underserved.
And when I talk about people being underserved, and you mentioned it, it's the self-employed individual. My big question on this is the individual who has a 700 credit score. They got 20% to put down. They're driving around in a Mercedes that's completely paid off. Let's say they own 3 or 4 pizzerias. Yet that person doesn't verify enough income that they're not qualified for that mortgage. From a lender perspective, that person is still a high quality buyer. I'm surprised.
I think it has to do with the legal ramifications and laws that I'm not familiar with.
Well, there's government.
I agree. I think as a lending, if we put all that stuff aside and you just were to look at them as a pure risk-based thing in a vacuum,
right?
If they can afford that and clearly there's money flowing, they should be a good risk. But I think something with the legal side of it is what.
Well, I think the legal side of it is all the money is coming from Fannie, Freddie, and FHA. Those are all government-sponsored entities. There's not that independent small lender who's entering that market. I'm surprised that a Valley National, a Columbia Bank,
I don't know what they're waiting for. I thought it would have happened a long time ago. I thought they would have figured this out 2 or 3 years ago and made that product because.
Look, so we've got a pool of borrowers here. Make them put 25% down, 700 credit score minimum, something to why has that market not entered? Why are we so hooked on the Fannie, Freddie, FHA, government money to fund this? Why has the rest not come in?
I don't know. I mean, a portfolio lender could create a program that fits that bucket, and they could charge a premium in the interest rate for it.
Right.
And it could just be that the industry is still kind of shell-shocked from what went down, and there's not been a lot of innovation in products. I guess I'm not really 100% sure why.
Lending industry, I'm talking to you. Now is the time. There is a huge underserved market. Portfolio these loans. Find these self-employed borrowers. You want to make it 720 credit score. You want to have them put 30% down. You're missing an opportunity. Put the program together. Billy will be glad to sell it. How many of those could you sell?
There's a good number of people that are in my bucket that are hoping and waiting for a program to come out, for self-employed people.
So guidelines were here. Guidelines are here. Lenders, help us pry this out. There's a section of that market that we're missing. And what about rehab loans? What about, so we have got the hard money lenders are out there. What about the non-owner occupied 2, 3, 4 investments? Is there anyone in this space?
I believe it's about 3 points up front and then a rate of about 9.5 or 9.9, something like that. So it competes with the hard money guys were
Well,
at 4 and
it's
14.
below the hard money.
Right. It's still pretty good, 70, 75 LTV, depending on FICO score and stuff like that.
And this just came out.
It's been around, but, you know, we've just been able to tap into it recently.
Gotcha.
So-
Well, I'm thrilled to see a crack in that market, and that's what we're going to
That's
do
only
here.
for non-owner occupied.
Non-owner occupied investment.
4 units, correct.
But that's a crack, and that's gonna, when that works out and those loans perform and they can prove that that is a channel for high quality borrowers to produce, then that's going to begin to expand and expand and expand. And I'm looking forward to that, and I'm surprised that that more lenders aren't doing that. You know, I just did one. I did a loan today with a regional bank. It's called Enterprise Bank, and they did a cash out refinance. Now they were a low LTV, but they were able to bundle a portfolio of 2, 3, and 4 family properties. So the regional banks are servicing this market. It's just, to my mind, not enough. So I really think that they're missing an opportunity there, because I'll go on record in saying I think we've bottomed and we're on our way up. And now, if values are increasing and you're at a 60, 70 LTV, I don't see how these banks are hurt. And I really think now is the time for them to get in the market.
Well, I think that, you know, we'll see what happens, but there has been some loosening up on certain things in that regard. So, you know, it's an interesting market. There's a lot of play. There's still buyers out there. The summer season's still upon us. We're going to hit that lull in August relatively soon, but I think right now it's still relatively busy, and there's still, if you're a qualified borrower, there's still deals out there for you to take advantage of. Good rates, low fees.
Well, Billy, I tell you, no matter where this market goes, I'm glad that we've got you to rely upon to keep us up to date on where things are going. G.L.O Show crowd, we're going to keep on having Billy back. Your love and support for him on the website and all the emails I'm getting saying, more Billy. We just want more Billy. I'm going to keep on delivering them for you. So, Billy, keep on coming back.
Translate those into loans, and it's a win-win for everybody.
And give him a call in August. We're both going to be sitting around. Thanks, guys.
Take care.
Bye. Do you want to become a better real estate investor? Go to njreclub.com. You'll get invites to all of our events and all of the G.L.O Show videos.